Hey traders, it's GOE Trading Academy here. Before I take any trade, I always start with a clean chart. I look at market structure. Is the trend bullish or bearish? Then I mark key supports and resistance levels. I usually start my analysis on a 4-hour time frame. Being a day trader and an intraday trader, I start my analysis on 4 hour, and then I go to my intermediate time frame, which is 1 hour, and then 15 minutes as my entry time frame. So before I start analyzing, I go to my 4 hour. I mark out my psychological levels. High of the week. My high of the week is usually marked every Monday of the week, every first day, Monday of the week. That's how and when I mark out my high and low of the week. So before I take any trade, like I stated, I wait for price to come into my zone, and I only consider a trade if I see rejections and confirmation. No impulse entries. Now, here is a quick breakdown of my USD trade from yesterday. My bias was bullish because price was holding above key structure and continuing the upside momentum. I saw a market structure forming from my 4 hour. I can see market structure forming, which means market literally creating new highs, new lows. So then I saw the setup forming up, and after marking my high of the week and my psychological level, I could see the market was forming a higher high, higher low, higher high, higher low, and a higher high. And by the time I entered the trade, I was expecting the market to form a new high above the previous high. But what happened? Market literally had to come down, retest on the psychological level and the high of the week. Whenever I mark out the high of the week, when price breaks above the high of the week, markets always tend to come back, retest the high of the week, and push into an upside trend. If it's a downtrend, whenever a market break below the low of the week, we should expect a pullback into that low. So this was my bias why I was buying USDJPY. I went in for that buy because I saw market forming a new high and forming a pure clear market structure, like I stated, creating a higher high and a higher low. So I went in because market hasn't broke to the downside on the low, but instead what happened, market came, it broke above the high of the week, and then it retested back on that same high of the week, and below that there is my psychological level, and then there is high of the week. Based on how I trade, I saw exactly what I was looking for. I saw an edge because, like I stated before I trade, I do have and look out for 4 confluences, which is the psychological levels, the high of the week, the trend line, and chart pattern, W pattern or MO pattern. So in this case, I saw 3 of my confluences, which is the psychological levels, which is then acting as a support, and then I saw the high of the week, and I saw a price action, a W on top of the psychological level and high of the week. So that gave me 3/4 confluences, and whenever this happens, I tend to execute my trade. So all I did was literally to risk 30 pips and then target 100 pips. So my 100 pips take profit comes into a psychological level at 145.500, which is definitely going to be a new high if that happens eventually. So that was my take profit area, and then I reached 30 pips and that was the setup I had yesterday. So this was the reason why I bought USDJPY, because of this market structure forming. And I entered yesterday and then got stopped out on 30 pip stop loss. And then during my pre-analysis, then I saw that market is still obeying this market structure, which means price came back, broke below the high of the week, and then retested at the psychological level. So when I saw this, I saw a price action clearly on the psychological level, and which gave me three confluences, which is high of the week, psychological level, and the price action, in this case a W, being formed on top of the psychological level and high of the week. So when I saw this, it was already late, it wasn't my trading time, so I decided to stay away from the market. But still, I still went ahead to analyze my trade. I still went ahead to expect a new high being formed on USD JPY. So that was my analysis on yesterday, and that was the reason why I took my trade. So I want you guys to follow GOE Trading Academy for daily setups, trade recaps, and real-time transparency. Whether it's a win or not, I always stick to the process. Discipline is key. So like I said, the setup match my trading plans, structure my zone, confirmation, and clean risk ratio reward. So this was my recap. This was my bias yesterday. So I just took this time to break it down for you guys so you can understand.